Okay, welcome to October 13th, 2023 Market Review presented by BSU Trading, or those of you who know me by Zach, or in the clothing business as Mando. We'll be diving deep into price action in our indices, the E-mini S&P 500 futures market, as well as the E-mini NASDAQ. Okay, starting from the monthly time frame, as we like to work our way from the top down, meaning from the monthly down to the weekly, down to the daily, and so forth, just like these big funds do. They're managing their market on a really long period of time. And so, us as speculative traders must use the same techniques and practices that the smart money engineers use. So on the left we have the S&P 500, and on the right is the NASDAQ. It's constantly going to be this. The right will always be the NASDAQ, and the left will always be ES throughout the presentation of this video. So starting with ES, this is my personal favorite. The S&P 500. I was trading SPY for a while before switching over to the futures market and seeing overnight prices deliver before equities open at 9:30 to 4 New York Eastern time. Getting into the brass tacks of things, I have been covering the two things that the market is constantly doing. Number one, spooling to liquidity, and number two, rebalancing inefficiencies. So what is liquidity? Well, above old highs and below old lows. If you don't know how to read candlesticks, I highly suggest that you email me, Zachariah@mandovintage.com, to get started, or you can DM me my Instagram. Either one, I prefer you use BSU Trading. That is my handle. Just shoot me a DM and I will gladly get you started. Back to the lecture. Throughout the month of August, we created this low that went into the midpoint between this candle's high in the month of May and this candle's low in the month of July. So throughout the month of June, this imbalance was created. That's why it's labeled June 23 for 2023. BISI. Now this classifies as a fair value gap. There are two fair value gaps. One being buy side imbalance. So there's an imbalance to the upside. See how this price action is nice and balanced. It is back and forth and there are no inefficiencies. Well, there is, but not any fair value gaps like this one right here. So it's a buy side imbalance, sell side inefficiency, meaning it is inefficient in sell side delivery. And so what the algorithm is going to want to do is it's going to want to draw back into this range to fill it. I've given this before, but think of a paint roller. You're painting a room, and you're dipping it in the pan, and you're rolling it against the wall. It's not going to be perfect. It will not get the entire range of the wall. And so when you're rolling up and it does leave those little specks, what do you have to do? You have to roll it back down to cover entirely. It's the same exact principle. As you can see, we rolled up left this inefficiency, and so we had to come back down to fill it. We did so nicely during the month of September, as well as trade and take out the previous month's low. Now, this month, the month of October, we rated the previous month's low of September, as well as June itself, that candle's low. So there's liquidity beneath old lows and above old highs. And so the market is constantly going back and forth, reaching for liquidity and taking out active orders because that's where these orders reside. That's what liquidity is. Now I'm interested in this monthly bullish order block. This candle's open. It is the last down close candle before a change in the state of delivery. So it's the last down close candle before it delivers 5 consecutive months to the upside. I'll see if we want to find support here, just like we did in the month of May as well as April. And there's also sell side liquidity resting below this candle's low of the month of May. I want to see a down close candle this month, but there's still 2 weeks left. So we'll see where we are at the end of next week, as well as the end of October. In the NASDAQ, we see the same thing. However, the same fair value gap right here, we closed outside of it last month. And so now this BISI now classifies as an inversion fair value gap. And I expect to see resistance found here. Now you might see this wick and think, oh, great resistance. However, true students of mine know that wicks do the damage of price and the bodies tell the story. So this outside coloring is permissible. When we drop down into the smaller time frames, you'll see exactly what we're reaching for. But note that as long as we don't close over 15,256 on a monthly basis, I expect our quarterly target of this BISI's high at 14,578 and 3/4 to be met. So from this candle's low to this candle's high, there is another fair value gap, and that is our target. All right, let's drop down to the weekly time frame. All right, here we are on the weekly chart at the beginning of the week. So this is October 9th. You can see this time and date stamp right here, October 9th, 2023. Um, I had all of these levels marked to start the week. So there's still 4 days left and 15 hours throughout this week. Much like on the monthly time frame, we have 2 weeks left to see where we close. So lots of time to see what price wants to do. I had this inefficiency back here from this candle's high to this candle's low marked. So from 43.51 to 43.05 1/4, we are finding support from there. Like I said, wicks do the damage, but the bodies where they close at inside of this range tell the story. Now there's a weekly volume imbalance, which is a difference in price from this candle's closing to this candle's opening price. There is no trade or there's no price volume in between this. So like nothing gets traded in between that. It's just a sudden move in price. It doesn't go from 43.05 1/4 to 43.05 1/2 to 43.05 3/4 to 43.06. It's just a huge jump. That is a volume imbalance. Much like what I've been teaching, the new week opening gap from Friday's closing price to Sunday's opening price, that's gap in price. It's not random. How does price move when there's no trades being taken? the markets are closed, no trades are being taken, how does price move? Ah, well, here's your answer. There's an algorithm, and price is controlled by an entity known as smart money. So they price these markets to wherever they want. And just like the owner of a clothing store, they can change their t-shirt's price from 40 bucks to 80 bucks in the snap of a finger. So that's the risk that you assume by leaving orders on over the weekend. You can't predict where price is gonna open at from Friday's closing price, which is why I do not hold overnights or definitely not over the weekend. Now, I pointed out this volume imbalance because we also left the same footprint right here. From this candle's close to this candle's open, there is a volume void. There's no trade, nothing happened in between those two. And so I was interested in balancing this entire range to start. And if we got overzealous to the upside, I had this candle's high in mind, which is also the low of this fair value gap. So this candle's low to this candle's high. That is a fair value gap in the form of a SIBI. And I also had this candle's open, which is a bearish order block on the weekly chart. So I annotate it as weekly bearish order block. Now, when there are two up close consecutive candles, or consecutive up close candles, I should say, rather, you want to use the first one. The first one is your main subject. Um, when you're bearish, you want to see up close candles hold price at bay. So I'll get into a better example of this, but this is true support and resistance factors. Um, and you'll see just exactly why right now. But the reason I use this candle's open versus this candle's open is because it's two consecutive. So I'll use the first one. And also, from this candle's high to this candle's low, if you were to measure that range, the midpoint of that is just about that level as well. So it's a confluence of levels. Just like back on the monthly chart, you saw price dig into halfway of this candle's low and this candle's high. You could expect the same thing to happen right here. So this was, remind you, October 9th, the start of the week. In the NASDAQ, there's the same sell side imbalance, buy side inefficiency, fair value gap from this candle's low to this candle's high. During the same time period, it was created. And that's where we're currently at. Now, of course, I want to see 14,578 and 3/4 entirely. I have mentioned that level for 2 weeks now at the start of the month, and so until we reach that target. But now I'm going to show you price currently. So this is price as of October 15th at um, 7 o'clock New York Eastern Time, so 4 a.m. Pacific Standard Time for everyone that's on the West Coast. I had mentioned power 3, which is basically accumulation, manipulation, distribution. The manipulation is the Judah swing. So when retail traders see 1, 2, 3, 4, 5 consecutive weeks of price trading lower, and they see a down close candle right here, because from the open to this, it's like this candle right here. It's black. It's a bearish candle, and so they're going to want to chase that. Um, However, this is just the Judah swing or the fake swing of the week. before the real move, which was the expansion higher. Now, this week was ridden with landmines. These landmines are called news drivers. Um, there's PPI data as well as CPI data, as well as Federal Open Market Committee, FOMC. And so whenever these news drivers hit, you can expect to see a lot of manipulation in the market or fast and volatile movement. Now, people that trade these are gambling. They know that a big move is coming and they hope, keyword hope, to be on side of these. There's casinos for that. We don't do that. These concepts apply all the same, but you don't want to get into a trade at times when risk is elevated. You might as well go and play the lottery. You're not going to play a pickup basketball game, 2 versus 5. The odds aren't there. You're not highly probable to win. And it's the same with these news drivers. You don't want to be trading at those times. You will get hurt. You will be punished. And if you do win, congrats, you won on luck. So everything here is skill based and repeats. There's no luck in this. There is discipline and execution on sound reason, sound logic. Bringing it back to what I just said, I had this level marked at 44.29 to start the week. We trade there perfectly, or I handle outside of that. Like I said, wicks do the damage, but bodies tell the story. Um, this this candle would have been a really good example of power 3 manipulation. For example, like this candle right here, we expanded the entire week, and then on Friday, we saw a little retracement into 20% of this candle's range. So much like this candle's low to this candle's high, the 50% of the range, this is about 20% of this entire candle's range. I'd wanted to see that come out to play, but um, like I said, this week was ridden with landmines and lots of volatility was in play. So no one can master the markets. All they can truly do is master themselves and how they view the markets. Now, going forward, these wicks, these huge long wicks, um, they act as gaps in price, just like this gap right here. That's how they act, and it's a very specific level. I would not like to see price trade past this white line if we're bullish, which we are. Uh, I would like to see price trade past this Wick's consequent encroachment or midpoint of this entire range. Taking out October's low, reaching for this weekly bullish order block. That's opening price. And in the NASDAQ, same thing. I want to see it attack this consequent encroachment of this tail. I call it the tail because it's the underneath wick, not the top wick. So it's the tail of it, and attack our quarterly target. All right, getting into the daily charts. Now each of these candles depicts one day of price action. Um, just like the two previous ones depicted 1 week of price and 1 month of price. This is dissecting it now into a day. Uh, this is the weekly bearish order block and fair value gap high, as well as your weekly fair value gap low right here. As you could see, price leaves the range, takes out this low over here, trades back up all the way back to clear these relative equal highs right here and reprice into that fair value gap in a deep premium. So from this candle's high to this candle's low, that is above the equilibrium or half point of that range. And so that is your premium. That's where you want to be selling short. And this is picture perfect right here. You could have sold short the rate on liquidity that was above these relative equal highs right here. We come back down into the fair value gap that was created in this move right here. So from this candle's highs, this candle's low, as well as this candle's high to this candle's low. You can pause and rewind if I said that too fast. We trade back down into it, touch the high end of this fair value gap to the tick. This candle's low and this candle's low are exactly the same. That is precise and accurate trading algorithm. It also gives a false illusion of a double bottom to retail. And so when price trades back up, touches this daily bearish order block, the last up close candle before uh, 3 consecutive candles or a change in the state of delivery, we find resistance. Remember how I said up close candles are a true resistance factor in a downward move. Notice how price comes back up to the opening price of that to the tick and drops back down. Right. So we find support once again from this daily fair value gap, but we close outside of this fair value gap. As soon as we close outside of this range, this now becomes an inversion fair value gap, and I would look to use this as a resistance factor. Um, as you can see, price opens, trades up into it, and quickly accelerates downside um, once that occurs. We had another following day of sharp downside delivery, leaving this fair value gap from 44.43 to 43.99 right here. Here's your weekly bearish order block level at 44.29. You come down to the weekly volume imbalance, as well as the weekly SIBI low. Um, we meet that objective first on this candle right here. This candle's low, hits it to the tick. Come down, trade back up. Bearish order block right here. This candle's open. It's not to the tick, like I said. Wicks do the damage. It's allowed to trade a little bit above it. But ultimately, look at where we close and how we deliver after that. Right down to the daily bullish order block, which is a down close candle over here that I didn't get to include in this picture, unfortunately. But it's at 42.42. We currently have sell side resting um, at 42.35 and 3/4. That is October's low. Um, but we rallied up. Um, this candle's open. This was Friday's NFP action. Trade down, hit this exact price point, and rallied all the way up into the weekly bearish order block, leaving a fair value gap on Monday's price action. Thursday, we hit that weekly bearish order block with CPI news and head straight down. Find support at first, and then the following day, we close outside of it, as well as raid the low of this where sell side liquidity would be residing. In the NASDAQ, here are the same quarterly target levels, as well as how we almost got there last week, but not quite. Um, and so you can see right here, um, price does the same thing, almost. It has been the leader on the upside, so it's been lagging on the downside. But here's the same daily bearish order block, hitting it, wicking it twice, but look at where the bodies end, not over it, beneath it. We close outside of it, leading this daily bearish order block as well. So we trade lower, take out August's low right here. Kind of chop around for a bit. Lots of range bound action and expand higher. Breaking this. I want to see a fair value gap left here, but we did not get that unfortunately as price balanced back down um, to this candle's high and then took off into your daily bearish order block, as well as this little inefficiency from this candle's high to this candle's low inside of your daily inversion for value gap, much like this one. It's that same range, just in the NASDAQ now. Took out lots of old highs where buy stops were residing, or buy side liquidity. Everyone fortunate enough to be profitable short in this move trails their stop loss to secure profits, and the market makers just use this as an opportunity to collect those positions and those active orders. Now notice right here how we close beneath this daily order block, bearish order block, I should classify it as, but it doesn't look like it because look at the start of this candle. That is a daily volume imbalance. It's a liquidity void. This does not classify as it's being disrespected. So much like this blue range on the weekly chart, this volume imbalance or liquidity void where price just gaps up. Same thing happens here on the daily chart, and it happens in every single time frame. But it happened right here, and we closed underneath it. The following day, we had a nice picture perfect power 3 bearish day. We had the open, the manipulation up higher, and then the quick downside delivery, and with a small retracement into 20 or 30% of the daily range. All right, dropping down into your 4-hour chart. These are the same daily SIBI levels from 44.43 to 43.99. The only imbalances I was really interested on the 4-hour chart are this fair value gap that's highlighted right here that will come into play into the next few slides, as well as the one right beneath it. You could visually see all the new week opening gaps outlined in black. Very small right here, only a 2 and or 1 3/4 handle gap from September 22nd to September 24th gap. But the gap from September 29th to October 1st was just about 20 handles, as well as this week's gap from 43.45 and a half to 43.20. So 25 and a half handles when the market is closed. Buying and selling pressure does not make the market, folks. It does not. In the NASDAQ, I was interested in these highs right here, which end up getting purged. And here's your daily bearish order block level, monthly target, and we'll get into all this price action, all this on the lower time frames. But before I do, I want to draw your attention to this little light bulb right here. I was interested in these highs, but also mainly this inefficiency right here from this candle's low to this candle's high. I only have this range highlighted because that's what's left, that's what's remaining of the paint that needs to be painted, and the specs need to be covered. So from this candle's high to this candle's low, we've already traded deep into that range, but there's still a little bit left. Much like in the weekly chart, from this candle's high to this candle's low, we've already dug into this range, but this is what remains of that inefficiency. And that is also beneath this candle's low, which is also the month of May's low. You're just seeing it on a weekly candle. So this low on the weekly right here. Back down to the 4-hour. That's what I mean. All right, Here's where we get into the brass tacks of things on the hourly down to the 30-second time frame. Yeah, that's right, less than a minute. But starting with ES, all the way on Friday's price action with NFP, we have a low, a high, and a lower low, which retraces into an hourly bullish break, bullish order block right at 42.48. We don't reach the low, and that's okay. That's perfectly fine. Price just wants to come up and take out everyone already profitable short before we proceed to the downside. Now back to what I was saying, from this low, high, lower low, the largest up close candle or the largest bullish candle between that swing is a specific PD array, which is known as a breaker. In this case, it is on an hour time frame and it is a bullish breaker. So when price comes into it, you can expect support to play a factor on it. So hence the hour bullish breaker. We also have this candle's opening price, which is your hourly bullish order block. So two consecutive down close candle before a change in the state of delivery to the upside. When price digs into that level, you can see just how reactive it is. Bounces up, consolidates a bit. Now this candle right here, it is bearish, but notice how we wick it, take out this low before expanding fast to the upside um, to fill the new week opening gap from this current week. So from this candle's close to this candle's open, we close that here, and then we trade to the previous new week opening gap created 2 weeks ago. And these are very precise levels. This candle comes in right to the tick, and so do others. Their price likes to gravitate back and forth from these levels. Um, and not just for 1 week, it's multiple weeks, which is why I have usually 3 to 4 on my chart. And so after this, we dig into our daily SIBI from 44.43 to 43.99. Get about halfway there, retrace. I had called your attention to, well, mainly most of my work is on the Nasdaq, which I'll get into. So I'm going to go over ES real quickly. But notice how this candle's low is higher than this candle's low over here, and that we take out this candle's low versus not, or yeah, versus price not doing it in the Nasdaq. And so price comes up, rebalances this candle's fair value gap from this candle's low to this candle's high, quickly sell off, taking out these relative equal lows, finding support at this fair value gap right here, breaks market structure or market structure shift, as well as this down close candle's opening price. I don't have it labeled with makeup as I didn't want to put too much on the screen, but I'm giving you the storyline right now. We rally back above, take out these highs, rebalance the entire 4-hour fair value gap right here. So that's this range, and this candle's high is this candle's high right here before sharply selling off. We come back up into this range and are met with resistance before another sharp downside delivery in the 1 o'clock hour. So the start of your PM session in New York. This candle's open is your bearish order block, as well as this candle's low to this candle's high. That is another fair value gap or imbalance in price. And so price comes up, drops back down, and redelivers to fill that entire range. Um, Notice that we wick above it, but we close within the range. And on the next candle, we trade right up into this bearish order block before sharply selling off. And this is to the tick. I can't remember that exact number. I want to say it's 4405. I invite you to go into your own charts and see if what I'm talking about is actually real. Don't just take my word for it. This candle's open right here, and this candle's high. So you're looking at, for this candle, the O for open, that price, what it gives you right here, and this candle that sells off aggressively, this candle's high, which is the H right here. All right. And so we return back to the new week opening gap that I was created at the beginning of the week from being about just about 100 handles away from it, but not entirely, about 85. Now what I want to get into is the NASDAQ, as the NASDAQ delivered some very interesting price action this week. Had me had me smiling from cheek to cheek seeing it unfold. So don't mind this Fibonacci right here. I was messing around with the 4-hour chart and forgot to take it off. So pay no mind to it. Last Friday, I had called your attention to relative equal lows behind here, as well as the fair value gap, this little orange region right here. The midpoint of that, are consequent encroachment. That's the classical definition for it, the formal definition for it, I should say. The midpoint of this range comes in at 14,660 and a quarter. This candle's low comes in at, it would be right here if I had my cursor over it on trading view, but this is just a screenshot of it. But you're welcome to go into your charts and check out this candle's low. I also posted it on my Instagram, on my private Instagram. But if you know, you know. Getting into this week's price action, we gap lower from the new week opening gap. So Sunday's open at 3 o'clock Pacific Standard Time or 6 o'clock Eastern Standard Time. We gap below, trade into this imbalance from this candle's high to this candle's low, just about the consequent encroachment, as well as last week's new week opening gap before expanding higher, filling this and leaving this imbalance right here, which was crucial on the way back down. But notice how we open, trade right to the high end of that range, and then trade higher, a little bit lower, make a new high, take out this liquidity beneath this candle's low before aggressively expanding higher into your daily bearish order block to the tick, retraces into this fair value gap from this candle's high to this candle's low. And I had called your attention to NQ 15,255 and a quarter. Price showed show a little willingness to reach for it, but ultimately ES was the only one that got there, and NQ lagged, which is a SMT divergence. So in a symmetrical market, you want to see both of these make higher highs and lower lows at the same time. That is just symmetry. That's a six sister approach, and these markets are sisters to each other. You want to see them act um, like a twin, like an identical twin. So Nasdaq failed to do so at that time, but in hindsight, we came up to take out this candle's high first, and every way that was profitable short from this little sell-off right here before aggressively expanding and taking out that low. And then once again, as soon as that happens, expanding higher to take out the highs that I mentioned on the 4-hour chart. So this candle's high back in September, as well as this one. And that's what happens in here. And so we purge it by a few handles and aggressively sell off lower here. Um, this inversion fair value gap will be important. Notice how it was a fair value gap at first, and we found support in order to take out the highs that were created right here, and then just plundered right through it. As soon as price closes beneath it, uh, I like to see it act as resistance. Same thing with this fair value gap right here. Um, Notice how price comes into it, finds support at first, um, as well as this hourly bullish order block. Trades back up into this inversion fair value gap, trades lower, touches the hourly bullish order block again, comes back up, hits your bearish breaker in this candle right here. We have a high, low, higher high, the lowest down close candle in between with the most volume. This low right here, extend that out. That's your bearish breaker, much like this bullish breaker right here. And I didn't put it on the screen for lipstick purposes. It would have taken up too much of it, and it's a hindrance to your eyesight. And so we gap lower, trade up a little bit, and aggressively sell off, taking out these relative equal lows right here, and closing outside of this fair value gaps range, making this now an inversion fair value gap. So while all of this is happening, ES had yet to purge this low, which was Thursday's low, I believe. Um, and we'll get into it on a lower time frame. But we also had the new week opening gap as a draw on liquidity on the downside, as well as this BISI's remaining range. All right, last thing on the hourly chart before we hop into the 15-minute. See how this candle takes out Thursday's low right here. But in ES, we had yet to even breach this low right here. Um, that was key in my decision making on where the draw on liquidity was. So this new week opening gap, as well as the current week's new opening gap right here. But mainly, since ES was lagging on the downside, um, and Q had already purged it, I expected ES to reach it as well. All right, hopping into the 15-minute chart now. Here's your hourly bearish order block, as well as the high end of that fair value gap that was significant. It colors outside the lines, but closes beneath it. And this final candle comes up, touches that exact level, and sells off, breaking this short-term low and closing outside of this fair value gaps range. And so on the next candle, when price comes up into this SIBI, as well as this bearish order block's low price, that is a great short right there. It spooled directly into Thursday's low, which is sell side liquidity, and there is sell stops beneath that. Liquidity resides below old lows and above old highs. Simple as that. No need to complicate anything. It also leaves this 15-minute fair value gap right here as it finds support from this BISI at first. Um, as soon as we close outside of it, we find it as resistance. So price comes up, trades into it, back down into new week opening gap, closes right at that level, comes back up, closes beneath it, and then ultimately spools to Thursday's low. As soon as we purge that, we come back up, retracing and taking out everybody profitable that trailed their stop loss in a hurry, but ultimately come into this fair value gap's consequent encroachment, shy by just a couple ticks, and sell off aggressively into the current week's new week opening gap high, and then kind of consolidate between these two levels, these two new week opening gaps for the rest of the day. In the Nasdaq, we had CPI's candle right here. This was a busy on the hourly chart at first, and so we found support here. That's where the bodies are closing. Come back up to take out that 4-hour chart buy side high, as well as reach into this fair value gap in orange before aggressively taking a sharp turn lower at 1 o'clock that day into the hour bullish order block and um, busy at the time. So this pink range. Come back up into the hour inversion fair value gap. Look at the bodies once again, showing respect of that level before coming down and trading lower, taking out the hour tail consequent encroachment. Um, Before it does take out this low, it comes back up into this fair value gap and taking out these highs right here. Note this high, it will be marked on a 5-minute chart. But yeah, so this is just a rate on liquidity before the true move to end the day. This vertical line is the start of equities open at 9:30 on Friday. So note it. In the first 15 minutes, we created the high of the day and never looked back. All right, dropping down to the 5-minute chart. This is your hour bearish order block and your hour fair value gap high, paying outside of it before going lower. Nothing too much I want to mention on the 5-minute chart in ES. You can kind of just see how all these levels mix together from the top-down analysis. 43.99, that's your daily SIBI low. Go back in the video and you'll see what I'm talking about. Now in the NASDAQ, this green dotted line is this high right here. Extend it out, we purge it, equities open, we make the high of the day, and then sell off. There was no good entries on the 5-minute chart here. This is just a sell side move right here. Simple as that. Taking out Thursday's low and reaching into the hour BISI. That's right here. Now all this right here we're going to get into on the 1-minute chart and 30-second chart. All right, now we're on the minute chart. On the left ES, on the right NASDAQ. This is your hour bearish order block. And go back to the hourly chart to see these exact levels and what they are. And so we color outside of it, but look at where the bodies close. Very beautiful. Yeah, just art really. No other words to describe it. And then we start the sell-off. Break this low. Don't leave a fair value gap. And so there's nothing really to get in short in this price action, at least on the 1-minute. You could cut through candles, but in terms of a model, there is nothing solid here. Come back up, touch the 15-minute bearish order block, and then sell off. This is your 15-minute fair value gap right here with the consequent encroachment level. However, I do want to get into this section of price action right here. So in the NASDAQ, we already had that sell-off happen. and we already reached Thursday's low. So the low that was created on Thursday, which was CPI, had yet to be purged in ES right here. So this low is equivalent to this low right here. It makes another low, as does ES, and then we return back into this bearish order block. Wait, what? It's not at the open or the low? What is this? So this candle's high to low, this entire range, the midpoint of that, just like this fair value gap right here, this black line is the midpoint. The midpoint of this candle right here is the bearish order block's mean threshold, or just the midpoint of it. Notice how price comes up to it and wicks it, but closes right at that level. And from that next candle, we never see price come back to it. This is going to be really evident on a 30-second chart, and you'll see how this makes sense. Levels that are different on a higher time frame are much more specific on a lower time frame, but they have to come from the parent time frame, meaning the higher time frame first. So now we're going to get into the 30-second chart. This bearish order block, this is that same level now on a 30-second chart, and it is now the opening price of this candle on a 30-second chart. Yeah, right? Okay. So when price does it and shows the respect of this level, I'm looking for a fair value gap to the downside that breaks market structure. That happens right here. So we have a big volume down close candle taking out this low. We leave a fair value gap. Price comes back into that immediately, colors outside of it, but look where we close ultimately. We make a new low. Um, my presumption in the S&P 500 was that we were going to take out the previous day's low, which was right here, as NASDAQ had already done so. And so I use both of these markets to gauge each other, which is why um, I'm always analyzing these two. So back to price action, we make a new low, come back up, touch the high end of the range, look at where we close, and then we start the spool into Thursday's low. And notice how we purge it and come right back up. Now, this is the NASDAQ. What I'm really interested in, this is what I mean by too much makeup. There's a lot of stuff going on in this chart. Um, but just like in ES, so I was looking for this big displacement leg. This is that same candle in the NASDAQ, and it takes out this low right here. Um, and so that was confirmation number one for me. I could have got in at the low end of this range. So when price comes up and touches this candle's high, that's entry number one. You have to allow for drawdown and heat. You see how price comes up, touches this bearish order block's opening price, and closes inside this range, makes a new low, comes back to now this bearish order block's opening price. I did get in right here. As soon as it touched that, I went short, targeting this low as well as new week opening gap right here. Price shows respect of that. We get a nice little fair value gap created right here. This is a breakaway gap. Basically, the premise of it is that you don't want to see price trade into it at all, and you want to see price just pull towards liquidity from it. You don't want to see it come back up into it like it does here. You just want to see it left unfilled. Um, so we trade lower. We at first found support from this fair value gap right here, from this candle's low to this candle's high. But as soon as we close, or pause before I get there, we also had respect of this up close candle's opening price. So to bring everything full circle, I said how up close candles in a down move should be respected. We have this up close candle right here. Come down, come back up to it, respect it. More down close candles, come back to this opening price, respect it. More down close candles, come back into this opening price, respect it. Come back down, come back up into this candle's opening price and respect it. And so that's exactly what I mean when I say up close candles should keep price at bay in a down close move. Okay, now that that's off my chest, back to this fair value gap. As soon as price closes beneath it, I expect the price to spool towards this low as well as the new week opening gap. And so that happens in this candle right here. Um, and as soon as that happens, it just explodes there in that little 30 seconds. Um, and that was it. That was the trade. Really beautiful stuff. After that, I closed my charts and enjoyed my life. I think I caught a dub in Fortnite. So yeah, thank you for watching this video. If you made it to the end, you are a strong soldier. It takes a lot of focus and diversion. Divert. You get what I'm trying to say. You have to divert your attention to this to really pay attention and get exactly of everything I am explaining. So thank you for dedicating your time into watching this video. I hope you found something insightful from this and the concepts that I use. If you're interested in learning about them or have any questions about what it is I do, my DMs are more than open for you to ask. I included my Instagram at the beginning of this video. It is bsu.trading. You can also email me at zachariah@mandovintage.com. Um, but that's going to be it for this video. Until next time, safe trading and be safe.